Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Quite an interesting week just taken place in the global financial markets. Really started by a bit of a Twitter storm coming out of the US from President Trump, saying that he was very unhappy with the Chinese and he was looking to increase tariffs now, and that will be starting pretty much immediately, going up from sort of 25 to 30% on a number of goods. Obviously, China then retaliated and imposed its own tariffs on US goods, which upset the president even more, claimed they were politically motivated. He then came out and ordered US companies to stop dealing with China and look to move their businesses back to the US, make America great, his usual sort of rhetoric, certainly on the campaign trail. That would sort of took economists and analysts really quite by surprise, because he has no real power to order any US companies to do anything. We then get to G7 and really very little comes out. A little bit of a talk about, obviously, the sort of global situation, events in Brazil and the fires in the Amazon, which is another story. Then on the back of the initial tweets, China tariffs and the trade war, and President Trump being very unhappy with the Chinese, obviously the US stock market fell pretty dramatically, and that sort of dragged global share markets down. President Trump then comes out and says actually he had a very good talk with President Xi. They were looking at getting back to the negotiating table. Both sides, China were very keen to make a deal. He said they really had no option. I think the US is pretty keen to make a deal as well, because certainly going into an election year is not going to be good for a US economy that is slowing and potentially US voters losing their jobs. That would make a pretty difficult campaign trail for the president in terms of making America great. Say when you've got rising unemployment and companies sort of closing down. So now we're sort of back in limbo, waiting to see what takes place. Supposedly there will be some talks taking place between China and the US to try and sort out this sort of trade spat, and that's really ongoing. But really, the market is sort of at the behest of the sort of tweet, just depending on what comes out on any particular day. And those tweets really sort of overpowered the comments by Fed Chairman Powell at the Jackson Hole meeting for the central bankers, talking about interest rates and how the Fed was sort of trying to keep the economy certainly on track. The recent rate cut was maybe just a mid-cycle correction, but certainly the recent sort of volatility and sort of market reaction has potentially put 50 basis point cut back on the table for the September meeting. Now, before that meeting, we'll obviously get the latest read on the US economy in terms of the jobs data. And if that is sort of a little bit weakish, around the sort of, I suppose, sort of 150, 160, compared with the sort of 200 pluses we've been seeing, previously, then potentially, say, 50 basis point cuts back on the table. Now, if that was the case, obviously that would please President Trump and certainly Navarro at the U.S. administration. They've really been hammering the Fed to cut interest rates certainly more aggressively than they have done. But certainly fundamentals, the US economy is not in too bad a shape. So it's just really going to be interesting to see how it sort of plays through in the sort of latter half of this year, and obviously in the sort of first half of 2020, especially with that being an election year. At the G7 again, President Trump was back sort of beating the drum to get Russia back to the table there and sort of include them in that G7, make it potentially the G8. Interestingly, he was the only one putting that view forward. The rest of the G7 members were pretty much firmly against it. Also interesting as well that many of the sort of analysts and economists and sort of market commentators out there are starting to talk about President Trump losing a bit of credibility now on these trade talks because you've got a tweet coming out one day saying we're looking at increasing the tariffs, and then sort of 2 days later says, oh, actually I had a very good phone call, talks are back on and we're looking at proceeding now. Both China wants to make a deal, they are very keen to make a deal, they don't have any option. And it really is sort of flipping from sort of one side to the other. Oil still sort of pretty much range bound around the sort of $55, and so it's just going to be interesting to see how that sort of trades now in the sort of third quarter of this year, especially as we start to head into that sort of northern hemisphere winter. Supposedly a little bit of movement on Brexit as well. Prime Minister Johnson has now come out and said, there is potentially a way forward, but still that sort of 31st of October deadline looms pretty large. But he seems to be finding a little bit of support, certainly from Angela Merkel, the German Chancellor. It's just going to be interesting to see if one sort of negotiations can sort of move forward and what sort of shape they take, and so whether it is possible to get a deal sorted out before that 31st of October. But certainly on the back of it, the British pound rose and the foreign exchange markets, that's normally a reasonably good sign that, the markets certainly believe potentially there is some good news out there. Here in New Zealand, obviously with record low interest rates, consumer confidence is, a little bit depressed. But certainly the, sort of recent cut in interest rates should underpin the housing market. That should see the consumer feel a little bit better about themselves. Certainly housing activity appears to be picking up a little bit, and consumer confidence is maybe not quite as negative as it first was. Although the government's still facing a few issues out there, and again, their sort of popularity is waning just a little bit. And it'll just be very interesting to see how this sort of plays through again. 2020, an election year. It's just going to be interesting to see how that sort of all plays through. Couple of fixed interest offers in the marketplace. You've got that Infratel just over 7 years, just over 10 years. 7 years is looking 335. just over 10 years, is looking around sort of 364-ish, 365 for the first 15 months. It'll then be reset over a margin over the 1-year rate. Transpower also have a bond out there, 6 years. Indicative rate on that is around the sort of 175 to 180. Now, if you are interested in any of these offers, call us on 0800 867 323. There's certainly investors who have been looking for income, are used to getting quite a bit more than those sort of returns, and obviously that is sort of driving the demand out there for sort of regular dividend shares. The sort of drive for yield, search for yield out there is still alive and kicking. And if you're interested in discussing what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.